discretion.
Hey everyone, welcome back to Investopedia India, World of Health Creation with Shefali here. So guys, in the last 3 years, we saw n number of IPOs coming in, out of which few gave good returns to investors, wherein many of them made investors feel like the people stuck in the clouds in this video clip, right? Because investors didn't knew what is happening to the company, what is happening to the stock, why it is giving such negative returns. Would it just get delisted, it would crash, or it would land ever safely, ever they will be in profits again. So again, one more IPO had come in, which is much talked about IPO of Medanta Hospitals with the name Global Health Management. So today in this video, we would analyze and decide what should be our strategy for this IPO. Should we apply? Should we not? If we apply, if we get the allotment, what should we do next? At the end, I would also tell you what I am going to do in this IPO. So the whole analysis would be based on draft red herring prospectus. What is draft red herring prospectus? DRHP is a document, big 400-450 page document which a company need to submit to SEBI, and wherein they had to declare their positives, their negatives, any litigation going on, their financials, their industry performance, their industry forecast, their own company performance forecast, why they are coming up with the IPO, what would they do with the money, and everything. So basis this draft red herring prospectus, a company gets a no to come up with the IPO, or the IPO gets rejected. So this draft red herring prospectus for Medanta Hospital was filed in 21, and now they have got a note from SEBI. So this DRHP I have read and analyzed in detail, and the short snippets from the DRHP I have picked and prepared this summary video for you all to understand what our strategy for this IPO. So let's start with the IPO, but before I do that, I have a small request. If you have not yet subscribed my channel or you have not hit the bell button, please do that right away, because as soon as we upload such informative, such analytical videos, you'll get a notification and you can watch the video right away and get benefited out of it. Also, if you want to be a part of Investopedia India family or get benefited in any customized way with our premium paid services, you need to contact us on 9821611667 via WhatsApp or by calling, or you can also read about the different plans in the description box. Out of the n number of plans, 3 plans are available via join button. There are trader, investor and multi-bagger plans, monthly membership. I am coming up with a webinar, so the topic should of course be of your choice, because whatever I do is for you all. So you need to go to the community page and cast your vote that you want this webinar on which topic, and soon we would inform you what is the finalized topic. Now let's start with actual video. Medanta Hospitals, everyone know about it because most of the celebrities and especially politicians get admitted into Medanta Hospital. If we talk about world-class hospitals in India and where Medanta stands amongst them, so on your screen there's a list wherein top 10 hospitals are taken, world best top 10 hospitals situated in India. And out of them, Medanta stands at rank 2nd with score of 87.33%. Let's talk about the already listed stocks which are there for any hospital chain, which are the peer group of Medanta Hospital. So let's look at 2, Apollo Hospitals and Fortis Hospital. So the first one, Apollo Hospital, on your screen, the chart, it got listed in January 1999 at a price of 12.73 and currently is available at 4,563 rupees. So yes, tremendous growth of 35,744%. But of course, over the years from 1999 to till date. Now let's have a look. Does Fortis also gave such kind of performance? So here on your screen, Fortis IPO came in May 2007 at the rate of 100.50, and currently it is available at 276.55. So 175.17% returns, not that high. Interestingly, if you see Apollo Hospital chart, it was quite flat For next 10 years, from 1999 to 2009, it was almost flat. And then it started pacing up, and moreover, majorly it increased after 2019 and mostly at the time of COVID, right? Let's discuss, does Medanta has equal potential to give us such kind of results? What should we expect as an investor out of this IPO, and what should we expect as a trader out of this IPO? What should be our strategy? So coming on to the next, global health IPO details, basic details which you need to know. So IPO date is from November 3 to November 7, 2022. The face value would be rupees 2 per share. The price range would be in the range of 390 to 336 per share. So this I find attractive. They have not come up with a very expensive IPO. This is quite a good rate which they have quoted. Lot size is 44 shares for one lot minimum size, and the issue size aggregating is up to 2,205 crore. And as per the grey market price, it is expected that the stock would see a premium listing of more than 100%. That is, it would list at around somewhere 600, 700. Now, what are the objects of the issue? What this company, what the promoters are going to do out of the funds which are raised out of this IPO? So they have announced that they would utilize these funds to pay off their debts. Huge amount of debt is there. So they would use these funds to pay off their debts and general operational purposes. So no extension or such plans are given for this IPO. General corporate purposes and pay off the debts. And one of the most important part, the analysis of the IPO and further than our strategy. Now, financials. So the foremost thing which I have taken in the financials is asset and liability statement, balance sheet, because this is very important. Company is under huge liability. So here on your screen, if you look at equity and liability part, there's huge liability and it is increasing consistently year on year rather than decreasing. The liability, the debts should decrease in a profit-making organization wherein the corporate governance is good, wherein the promoter intention is good, right? But here it is decreasing. But does that mean a negative for this IPO or this hospital chain? No. Let's analyze further. It's too early to conclude. So liability part is a bit concerned. Good part is, honestly, group had already informed that we are coming up with an IPO because we have huge liability, we have huge debt, and we want to pay off this debt, and for that we need money, which we are not able to generate out of our hospital running revenues. Now let's see the P&L statement. If we look at profit after tax in year 2019 was much higher than what is there in 2020 and 21. Profit after tax is decreasing. This is also a bit alarming. Why? If we talk about hospital chains, hospitals made good profit in times of COVID. This is what we assume. Now let's see why the numbers are not justifying that. Coming on to the key financial parameters of financial year 21, wherein we are comparing it with all the peer hospitals, including Apollo Hospital, which is currently at such a good price. Operating income in financial year 21, year-on-year growth percentage, everything is there. And you can see, if we talk about PAT year-on-year growth performance percentage, Apollo Hospitals shows minus 68.3% and Global Health, that is Medanta, shows minus 20.7%. All others, Narayana, Max, Shelby, Healthcare, everyone has shown negative percentage growth. So Global Health, Medanta is considerably at a good position. After Fortis, Global Health is ranking. Coming on to the further detailed analysis of ROCE and OPBIT margin for major hospital players in 2021. And over here also we see a good positioning of Healthcare Global Enterprise, that is Medanta Hospital. Of course, Apollo Hospitals is much higher. Now, who are the major shareholders of the Medanta Hospital or Global Health Management before this IPO? So, Dr. Naresh Trehan, who is the founder of the hospital chain, holds 34.31%, Anant Investments 26.10%, Turner Investments 17.27%, Sunil Sachdeva jointly with Suman Sachdeva 13.67%, RJ Corp 4.02%, and LG Image Limited 2%. Now, coming on to the strengths of this hospital or this IPO. So, the hospital is leading among tertiary and quaternary caregiver hospitals. Also, if we talk about the technology, the infrastructure that is world class, the most renowned and good doctors, professionals are associated with this hospital. They have big time focus on clinical research and academics. They have a track record of strong financial performance despite the debts and the liabilities. They have n number of growth opportunity in the existing areas and also in the digital health services. Needless to say, their staff, their doctors, doctor fraternity of the hospital, senior management, all are much experienced and best in India. Coming on to the comparison with industry peers, if we talk about Global Health, Apollo Hospital, Fortis, Max, and Narayana, top 5 players. Here, if you see, earning per share for Apollo Hospitals is diluted 10.74. For Global Health, that is Medanta, it's 1.14. And for rest of the 3 players, Fortis, Max, and Narayana, it's negative. So definitely, Global Health stands at a very good position in terms of earning per share. Now, let's see what is the growth opportunity available for this hospital overall to grow. So, India's population growth on your screen projected till 2030. And out of this growth in population which would be there in rural versus which would be there in urban areas, so this continuously is increasing since 1960. It was 18% in urban and 82% in rural. And if we talk about 2030 projections, it would be 60% in rural and 40% in urban. So all the hospital chain, like, because if you talk about Medanta, majorly it is available in Delhi, NCR and Lucknow. It is also located in Indore, but majorly it is, the big focus in Delhi NCR hospital. So definitely the people residing in urban areas is increasing, and also people coming in for treatments in urban areas is increasing. So there is growth opportunity for this hospital. If we talk about government initiatives, so key budget proposals, just have a look at budgetary allocation towards health and well-being increased to 2.23 trillion in fiscal 2022 and rupees 350 billion towards vaccination in fiscal 2020. If we talk about this health and well-being expenditure for fiscal 2022, so on your screen, the bifurcation between healthcare and well-being and VGF support will aid in the development of hospitals and healthcare centers and the public-private partnership. Now, if we talk about state-wise how this budget would be allocated, so Delhi NCR stands at top, which would be very beneficial for Medanta. On your screen, state-wise rank on healthcare spending versus rank on health index. So Delhi NCR stands at first position with 11.1. Now, overall healthcare delivery market in India is growing with a CAGR of 11 to 13% from financial year 2016 to financial 2021. And from here, if we talk about to financial year 2025, it is projected at a CAGR of 15 to 17%, which is a very interesting, very good growth rate. Now, as I told you that as a layman, we feel that COVID was the time wherein hospitals made very good profits. But let's look at this chart, what hospitals actually want to say, that COVID was not that fruitful a year for them. And in fact, it impacted their performance. Let's see how. Because they say out of 4 revenue generation sources, only the COVID treatment, COVID patient was a positive for them. Medical tourism, that is the people from the countries outside India, the small countries wherein medical facilities are not good, like Bangladesh and all, people come here for the treatment. So that was 0 because obviously cross-border travel was completely banned. Surgeries was very negative because obviously very low. Until and unless it was very urgent, a person would die without that surgery. Everyone opted not to get that surgery done because obviously that was a difficult time, and if a person gets COVID, which the chances are very high if you go in a hospital, so that would be very dangerous and that can be life-taking. Surgeries were very down. OPD cases were further down because people avoided visiting doctors in those 2 years. So this overall impacted the overall performance and revenues of the hospital. Doctor fraternity suffered from this. So they hope that now they would see a recovery, but if any such situation comes again, then that would impact them. Now, coming on to the risk which they have clearly announced in DRHP, Draft Advisory Prospectus to SEBI. So the best part about this company, this hospital chain, I like this, that the DRHP was very crisp, very neat and clean, and each and every information was very clearly, very precisely mentioned. There was no, trying to hide information or trying to manipulate data. So the intent of the shareholders is good, the corporate governance is good, and I find this stock trustworthy. Now let's see the risk factors, and then we would conclude whether we want to invest into this one or not. Moreover, the risks associated which were highlighted were like normal. With every business there are few risks. So they highlighted one this, that like in COVID-19 their profitability impacted. So if any such waves, which is very dangerous, comes and such lockdowns happen, it might again impact their profitability, which is very much understood. The second, they talk that if maintenance of a hospital like Medanta requires a high cost maintenance, because the professionals they have, the doctors, they are the topmost doctors, and of course their paychecks are also big. Also the lights, the equipments being used, the research being done, everything comes with a cost, and therefore the maintenance of such hospitals comes with a huge cost. So obviously it impacts the bottom line. Their operations are largely located in Delhi, NCR and Lucknow, and if any negative things happens in this location, so that would very badly impact the performance of the hospital chain overall. They are obviously associated and are subjected to legal risk associated with medical fraternity and hospitals. If any new regulation comes, that might impact them. Certain land wherein they are situated, they are located, they have not purchased those lands where their hospital is there, and they don't have a clear-cut lease agreement. So any problem in renewal might lead them to shift their location, and that might hamper their activity and profitability. As I told you, not much is there in risk. One risk is there which I've covered in end, which you must definitely know. Of course, if they don't continually upgrade themselves in terms of the equipment, in terms of the research, and also in terms of cyber security. Outside India, we have seen cases wherein people, the cyber attackers, they hijack the overall software system of a hospital, and obviously because patients are there on oxygen and ventilator, they can control it. So the hospital had to pay a huge amount of ransom. So they have to be upgraded in all such perspectives, in all such terms. And if not, then they might be impacted. Now, most important, the last point, they have some outstanding litigation, the legal cases against them, which you need to know. So on your screen, criminal cases, there are 3 criminal cases amounting to 5.1 million. So if they lose on this, obviously they'll have to pay the penalty, and it would impact their financials. Material civil litigation above the materiality threshold. If you see any disciplinary action related from SEBI, nil. Tax proceedings, material civil litigation, they are normal. With such a big chain of hospitals, this kind of cases are very normal to happen. If we talk about promoter, any criminal cases, that's nil. Any material civil litigation related to promoter is nil. So overall, if I talk about the promoters, the group, it's a clean group. You can definitely apply into it. I'm going to apply it, but when I'm going to apply in this, I would apply for one lot, one. Second, I am not be very hopeful that as soon as it would be allotted, it would be, listed at 200, 300%, and then it would again show a rally, and then I would book profit and I would come out. I'm not applying with that perspective. And if you are also being over optimistic, you should avoid. If you want to apply and you want to hold this stock for long term, say 10 years, 20 years down the line, you can apply, you can hold it only if you are able to monitor it. Because today scenario is different, 3 years down the line it might be different, 5 years down the line it might be different. So any such stock which you are accumulating for long term, you need to monitor that. I hope you like this video. If it's that, please do like and share. And don't forget to subscribe. Thank you so much.